China is a large portion of our portfolio. I think one of the things we really like about China is the fact that they're leapfrogging the West in terms of technological innovation in many regards. One area that really comes to mind for us is the payment sector. In China, you have over 800 million internet users, and already you have 80% of all transactions done through mobile. This is way ahead of the West in terms of penetration of mobile payments. This is being enabled by very large innovative companies like Alibaba, Tencent, that are basically changing the game in terms of how payments are done in China. And what's very interesting is China actually skipped the whole credit card penetration step. When you go to China, it's actually kind of foreign to them for you to come and try and pay with a credit card. I remember last time I was there, I got looked at very strangely when I presented a credit card for payment at a convenience store, because the vast majority of payments are done through mobile. And payments is just one example of the innovation that's taking place. It's actually outpacing the West and creating unique investment opportunities for us. You also see it on the artificial intelligence side of things and the fusion of AI and fintech, and the list goes on. So I think from a long-tail growth opportunity, the play here is really increased productivity, new business models, disruptive business models, and leading the way in terms of tech innovation.
There's a couple things that would worry us. The first would be, China has been more focused recently on opening up their financial markets, which is good for us. But if China were to ever go to the other extreme and somehow change their rule of law, or somehow instruct some of their VIE owners to begin to take back some of the companies that are listed in the U.S. Under this VIE structure, that would be a huge red flag, and that would lead to a lot of capital destruction and probably set China back, and also make us quite wary about investing in China. The other area where you would need to watch out for is the overall debt problem that China has taken on since the global financial crisis. Their debt to GDP has gone from essentially about 160% to over 300% today, and it seems like for them to continue to grow, they will have to continue to use leverage as a tool for them. So for us, what we would be watching out for is any meaningful deleverage from them that would kind of slow their growth, any sort of big issues on the property side, which a lot of people use for savings and wealth creation. Those things could begin to signal a turn in the overall economy.